Good evening and welcome back to our Rex Fuels channel, where we discuss issues and trends facing the oil and gas industry. If you're new to the channel, can you like, subscribe, and share to stay up to date with the current trends? We have with us Pranav Kant, a veteran of the oil and gas sector and an expert on strategy and marketing. Pranav has an extensive international experience working in Paris and Singapore, in addition to India. He has held various leadership roles in Total, BP, and APAR. Welcome, sir.
Thank you.
Well, it's a pleasure to have you here once again, sir.
The pleasure is all mine. Thanks.
I hope the week has been going really well for you.
Well, yes, it has been an interesting week. With markets really behaving in a manner which we expected, so it's feeling good.
That's great to hear. My first question to you today is, you have predicted the weakness of crude for the third week in the row. Do you believe the prices will soon reverse?
Yes, largely everything we had hoped for in the oil market is coming to fruition in more or less the manner we anticipated. This is primarily driven by some of the macro fundamentals of the demand and supply. And when we see the demand situation, the big guy in the market is US, and where the implied oil demand data has been rather disappointing. That has been the biggest reason in the recent weeks. And let's not forget the China story, the COVID lockdown story. It's still evolving. It's not settled yet. But the fact is the year till date, their demand is still lower by about 40,000 barrels per day compared to the 2021. And 2021 itself was not a great year. So what we are seeing is the continued suppressed demand in China, the biggest growth driver for the crude growth across the world. US as the biggest consumer is disappointing on the downside, on the demand side. And rest of the world is growing, but in bits and pieces. So India being a big exception, that it's delivering some very healthy growth numbers. But overall, on the balance, the demand continues to disappoint. And then looking forward, we have the inflation and the recession fears. So they would continue to play. Coming back to China, what we still need to see that till their CCP Congress, which is in September, and further beyond, whether their demand is muted demand is because of COVID-related lockdowns, or is there something more structural happening in China? We do not know yet, but the risk of some structural change in China to the downside cannot be foreclosed. So overall, the global demand would remain muted. So that's on the demand side. And we look on the supply side, the US production is going up. The OPEC production is increasing marginally. But the key point is increasing, not decreasing. Russia, for third month in a row, is increasing the production and exports. So on balance, and not to forget the Libya, which has come back on stream with about 860,000 barrels per day. And in 2 weeks' time, it will be touching 1.2 million barrels per day. So overall, on the supply side, situation has eased rather significantly. So in balance, coming back to your core question as to where we see the prices headed, we see prices headed lower, and 90s still would be the new normal for the Brent.
The balance between demand and supply seems to be a little chaotic as usual.
But it's moving towards easing of the crisis. So we see very strong bearish trend.
Oh, that's great to hear. My next question to you today is, EU has given partial permission for selling Russian crude to some countries. Do you think this will help have a major impact on prices?
this is a very interesting question, and thanks. And this has to be seen in the larger context of the geopolitical situation, because economy is a subset of the geopolitics. It cannot exist without it. And before we get to your question about EU giving some sanctions relief for the Russian oil imports, another very important related development is the grain deal, which has just been signed about 20 hours back to deblockade the grain export from the Ukrainian ports. So these two data points signify some kind of thawing, we hope so at least, in the geopolitical situation facing Russia and Ukraine. So all these portents that we might be hopeful for some level of easing of the Russia-Ukraine crisis, because European Union cannot find alternate source to the Russian oil and gas, and all this easing of sanctions are kind of a reality reflecting in the policy making. So we are seeing 7th round of sanctions now, and all these easing of things. And let's go back a few weeks where European Union gave the taxonomy relief to the gas and the nuclear to be treated as green fuels. All these are interlinked. So we hope that we are getting to a situation of easing of the geopolitical crisis, and which would in effect would slowly and gradually bring forth larger supplies to the market. So it's fairly interesting and portends great hope for the oil markets.
As you said, rightly said, the markets seem interesting. So let's see how this week goes.
Yes,
Thank you so much. Sorry. Thank you so much for joining us today. As always, it was a pleasure to talk to you.
Thank you.
And thank you all for watching. Continue to like and subscribe to our channel. We'll see you soon.